Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, March 22nd, 5:44 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Apologize for the late start. First of all, crazy close to the market, and add on top of that technical difficulties with my charts, getting us to kick this off a little bit later than normal, but we'll get right to the point. So, state of the market, correction with the tech rally, quarter to three this afternoon, maybe 3 o'clock. I was thinking, well, maybe I can get rid of this correction because we were rallying very nicely, but it just takes one wrong phrase from Jay Powell to completely turn things uh, in a 180. The market was extremely volatile after the 2 p.m. announcement. Actually, it wasn't that volatile after the announcement, or even after he read his statement. But when the Q&A started, one wrong phrase, no cuts this year, that sparked a complete negative reversal. After some very dovish things that he said before that, sparked a big rally. Uh, that turned the rally completely on its ear, and we closed at the lows of the day. We'll get right into it in a little bit. Check over here at the trend gauge. We're neutral on the leaders. I need to see how the market leaders actually held up pretty well today for the most part, but the baby went out with the bathwater the last 30 minutes of the session. The only thing really that held up strongly was some semiconductors and a couple of growth leaders. So we're sticking with normal here, or neutral, to see. There's nothing normal about this market. We're sticking with neutral to see what transpires the rest of the week. But we've got a plan either way, as always. So short term, we had one close on the S&P above the 21 yesterday, actually cleared the 50-day moving average during the late afternoon rally, but broke back through the 50 and the 21 by the end of the day. So we're showing bearish slash downtrend there. The exception is the NASDAQ 100, which continues. The FANG stocks continue to hold up pretty well and add semiconductors onto that. Long term, we're showing neutral above the 200-day. We've got the S&P and the NASDAQ 100. S&P came right down and held the 200-day moving average at the close. Doesn't mean we're going to hold it overnight or into tomorrow, but we tell you what's happening right now. We don't make predictions, so we're neutral relative to the 200-day moving average. And again, a market can't be held up by uh, 25, 30 stocks forever. And what a difference from 3 p.m. Eastern Time to 4 p.m. Eastern Time. So stay tuned with us through the rest of the week, and the podcast Friday afternoon, which gets posted to YouTube Friday afternoon and emailed out Saturday morning, will guide you with the indexes and leading stocks also. So as I said, what just happened? No cuts this year. Big negative reversal. Here are the final numbers. G6 down 2.5%. S&P big reversal down 1.65%. NASDAQ 100 down 1.4. Dow down 1.6. Midcaps down 2.5. Russell down 2.8. Global Diversified 60/40 down 0.41. In-house GROTECTION down 0.66%. Our the leading stocks that we hold are holding up a whole hell of a lot better than the S&P, and we've been focused on the NASDAQ 100 instead of the S&P because of the strength there. That's the reason for the outperformance today. Let's get right into it, and we'll start off with a chart of the S&P 500. So why do we go through all this trouble trying to decipher what's going on with the market? Well, there's two main reasons. The first one is there's no way in hell we're going to let our clients lose a bunch of money in a severe bear market. These are the numbers. All of these happen based on one massive technical signal that we follow, and that's a break of the 200-day moving average. Once that breaks, All bets are off on the bullish side. We go to maximum defense. We won't be buying anything unless we get short-term buy signals to get us back in. We'll put our stops in for everything that we're holding, which is basically the situation we're in right now, should we undercut the 200-day moving average tomorrow. But all this pain, especially the highlighted years, they all occur under the 200-day moving average. And we dodged most of the downturn in 2022. We started participating in January when we got back above the 200-day moving average. That's the big black line on this chart. The recent bank crisis got us back below it. Tech stocks pulled us back above it, but Powell today might have quashed the rally. So we'll see what tomorrow brings, but basically you can see we got back above the red line, the 50-day, and I was checking my buy list, knew it was a volatile day. We didn't do any buying except for a small early ad on something that was just really acting well. But then we broke below the 21 by the end of the day too, closing right on the 200-day moving average. Now, if you go to the NASDAQ 100, this just looks like a straight up off the bottom, failed breakout at the top of the range and reversal, really a completely normal behavior. It's the violence of the behavior that happens. And here you can see 2 p.m. Powell, the initial reaction up. We pulled back a little bit. We're holding. His press conference starts right here around 2:30, even with the statement down, back up. 250. Then we have a pullback again, attempted a rally, and then this massive sell-off the last 30 minutes of the day. Just brutal. Um, but all is not lost. Back to the NASDAQ 100. This is, like I said, completely normal pullback, but we've got to see some participation by other areas of the market. We can't just have semiconductors and FANG stocks rowing in one direction and the rest of the market rowing in another direction. You can see this little hook down from overbought on the NASDAQ 100 and on the S&P. Once we got off of oversold, that little hook down too. For now, it's just one day, but it was a violent reversal, and we'll see what the rest of the week brings. So here is the Dow Jones Industrial Average. We got to close above the 200 yesterday, reclaim of the 21 intraday, back below the 200 by the end of the day. Mid caps and small caps continue as a lack of confidence in the banks continues also. We moved above the 200-day moving average on mid caps around during the Fed rally right after the 2 o'clock 2:30, but also closed at the lows of the day, not recent lows, but at the lows of the day. And then small caps can only manage to get back above the 80 MA, closing near the lows of this recent consolidation. Let's bring up the bank indexes because this is almost not quite a closing low of the correction for KRE. That's regionals. KBE includes some of the big banks. That's slightly healthier, but not much. FRC is the bank that seems to be in the biggest focus. That closed at new lows, down 15.47. Add PACW into that today, down 17%, not near its lows, but this is the latest one that appears to be getting some concern from regulators. So not a good sign all in all in the indexes. Let's go to the dollar. The dollar out of the gate with the announcement and the statement, the dollar dropped hard. Look at this big 2 o'clock drop. That's bullish for stocks. That's bullish for precious metals, and gold shot up. Let's go to GLD right away. You can see it shooting up right when that went out. And it closed near the highs of the day, just the opposite of what the market's doing. So for now, gold, the safe haven with the weak dollar. Back to UUP. It came back some toward the end of the day. I mean, rallied a little bit off the lows at the end of the day. Let's go back to the daily chart here. This is new lows breaking the 50-day moving average for the dollar. This is normally bullish for stocks, but we've got a lot of fear with the financials in, and again, NASDAQ and tech holding it up for now. Can't hold it up forever. We've got to get more cooperation. And Powell was also asked about a soft landing today, and he said, he couldn't even, didn't even feel like he could comment on that with everything that was going on in the market. So here's the broad bond market up on the day. In fact, making new recent highs. That means yields are lower, and we'll check those out in a minute. Here's TLT also making not a new closing high, but rallying, closing at the high of the day. Corporate bonds, LQD, new high. Junk bonds, JNK, well off their highs. Here, let's go to the rates now. The 10-year TNX down 3%. Rate down means people are flooding money in because of fear. This is what happened late in the day. Now this closes at 3 o'clock Eastern time, so you didn't get the full feel of what was going on. But here's TLT closing at the highs of the day, just the opposite of bonds. So money flowing into the safe haven is going to drag down yields, not necessarily because of what Powell says is going on with yields, but because of fear, and fear in the market is not a good thing. So big reversal on the yields, closing near the lows of the day, right on the 200-day moving average. I showed gold and how it rallied. GDX not making a high the way GLD did, but also up 1.9% on the day. Silver up 2.73%, a recovery high. Let's go back to that GLD chart for comparison. You can see how much stronger that is. And then finally, Bitcoin down 5.7%. So Bitcoin flipped today from we're fleeing from the dollar into Bitcoin to we're going risk off, as it gave back 5.9%. Market, a lot of crosswinds that need to play themselves out. So let's go to the tail of the tape, and then we'll talk about our plan. So you can freeze it if you want to, but here's the bottom line. Uh, Here is what the dovish thing that Powell said. So first of all, we come out 2 o'clock, the pivot. We're at 4,001 on the S&P, basically unchanged. We're at 311 on the Nasdaq 100, up a little bit from yesterday. 25 basis point hike. As expected, it was over 86% odds by the time the Fed rolled around. So everything's fine then. He started talking about we understand with the banking crisis that credit is going to be tighter, and this could act like the equivalent of another rate cut. So he was actually talking about pausing, that they may not have to do another cut if these tighter credit situations slow the economy. He expected them to fight inflation. He expected it to impact unemployment. And then somebody asked him, so with the possibility of a pause, the market is pricing in rate cuts later in the year, and he said, "No, we've made it clear that we're not planning on any cuts this year," and that was the final nail in the coffin of the rally. uh, and we completely reversed at that and sold off into the close. So the market thinking that it's going to get easing later this year, and Powell has been firm about not wanting to make the mistake that um, Paul Volcker made, where he uh, stopped raising and started cutting too much, and inflation comes back. He kept reiterating we can get to the 2%. He can't get to 2% the way without a hard landing recession. And I really don't think the market wanted to hear that. And if the initial price action stands, it confirms what I think, that they really didn't want to hear that. But that no cuts this year uh, was what triggered the massive reversal in the sell-off into the close. So the day count from 2 up days to 1 down day, we're back below the 8 and the 21, first day below, back to negative expectations. Well, neutral if we hold on to the 200-day moving average, but uh, we understand that if the continuation of the close carries on for the rest of the week, we'll flip to getting rid of most of the exposure that we have left, or we'll set our stops and possibly do some active locking in of profits. Everything that we own is at a gain right now. We sold UPRO today. That's the long in the S&P as soon as that went negative. So we went flat on that. We trimmed 40% of our QLD, locked in profits on that. The one buy that we did, ON, the big gap, massive volume, was just ramping this morning. When it pulled back on one of its ramps, we added another percent to it. But the bottom line from trimming the index longs, we reduced our exposure from zero point 0.9 to zero point 0.7. So basically 7% of the S&P 500, and we still have 40% in short-term bonds. So basically, we're a little bit more long than a 60-40 portfolio, and that long is not via the indexes; it's via the QLD and the stocks that we own. And we're going to review those charts before the end of this video. So huge volatility after he said that no cuts this year, and the market didn't like it. The only things up. Bond prices, gold, and silver stocks, 11 out of 11 sectors down, especially XLRE. No rate cuts was really not kind to real estate, biotech, software, and the dollar was down, which again, why gold and silver stocks were up. So here's what we're still holding: SOXL, and the rest of these tickers, which we'll go right through. And we also still have let's see, 7.5% in QLD. So that's the equivalent of 15% long NASDAQ 100. Bottom line, Powell, no cuts this year, sparks huge negative reversal. Not a very uplifting video tonight, but let's go through the charts of the stocks that we still own, and you'll see that you're going to see negative reversals because that's what the market did, but all in all, uh, no significant damage. So here's semiconductor, same thing as the NASDAQ 100, negative reversal off of new highs. Really doesn't look like anything spectacular happened today, closing down 1%, big deal. That's less than the ATR. So this still looks fine, and semiconductors, all in all, look fantastic. So TMDX, this is the 1% that we have in this fantastic story of a medical product. That's hanging out in a tight range. We still have gains in this. ANET, strongest stock in the market, was ripping, made a negative reversal along with everything else in the market. We locked in some gains on this lower with how it was 4 ATR extended from its 21. It's closer to 3 ATR extended right now. So maybe a gentle pullback in some of these techs before the market rights himself. This is at the top of the buy list, strongest stock in the market. Well, one of the strongest. NVIDIA is right there with it. Palo Alto tried to move out, reversal along with the market. That chart still looks fantastic. We still have gains in that. First Solar, negative reversal, sitting right on the ADMA. We still have small gains in this. AMD was up over 5% at one point today, rallying along with NVDA. Just huge, got above 100, still closed positive 1.7% on the day. Excellent action from this stock. I'll show NVDA. We don't own it. We own SOXL, but a big negative reversal here in the strongest stock in the market, also keeping in line with what the market was doing. Tesla, negative reversal at the 200 level, not the 200-day, the 200 price level. Still above this. I mean, it's really trending nicely. The 21-day moving average flipped from resistance for a couple of weeks to support. When we got back above it yesterday, still above it on the pullback. We want to make sure that that holds. And ON is the big gapper that we added. We own a 3% position in this right now. Our last buy is slightly underwater. The first two are positive. But again, even a massive volume, big growth stock can't buck a negative market. And then GLD, maybe the one thing that can hold on to the market. As you can see, it was up 1.7%, bouncing off the 9 EMA or the 8 EMA today. So that's everything that we own. We've got our stops in place for these. Not going to let anything go from positive to negative. We'll see what the next couple of days bring, but as always, we've got a plan. in place to handle whatever situation the market throws at us, and that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Want to remind you again about that webinar I'll be taking this week with Ticker Monkey on gaps. They've sent out some preliminary data, and it's mind-blowing the depth that they went into quantifying power earnings gaps and how they act after the gap. And look at last night's video for information on it, or if you want, I wouldn't miss it. Plain and simple. I had somebody tell me, a mentor of mine back in 2006, 2007, are you going to get serious about this or aren't you? Do you want to do this or don't you? Because you can't do it halfway. Sometimes you have to make investments in what you truly want to do. And that's what I did, got me where I'm sitting today. It wasn't easy, it wasn't inexpensive, but for the price of this is well worth uh, the gains that it's really a blueprint for success for playing gap up stocks. I'll just put it that way. So check out at TCM LLC. That's Jason Thompson at Ticker Monkey on Twitter if you want more info. So that's going to wrap it. Remember, again, it's not how much you make in the market, it's how much you can keep. That's why we get defensive when it's time to get defensive. We get aggressive when it's time to get aggressive. Um, Rules for managing both sides of the market. Uh, Reach out if you have any questions. And with that, I'll wrap up. One hell of a Wednesday, March 22nd. This is Don Vandenbord with Just the Facts. They're not always pretty, but they are the facts. And every day we go through gets us one day closer to the next bull market, where we'll be involved in the next big leaders. Thanks for watching and have a great day.